Australian property prices have continued to rise, putting the great Australian dream of home ownership further out of reach for many. So, should that dream have to change a bit? Well, here's SBS Finance editor Ricardo Goncalves.
Janice, the first 3 months of 2015 was good for Australian property prices, with capital cities enjoying an average 3% increase. The median national price is now $530,000 according to CoreLogic RP data. So, is the housing market really unaffordable, or should those entering the property ladder need to change their strategy? For some, the dream of home ownership is out of reach.
We live in the inner west, and there's only way we can live there is by renting.
It has become unaffordable
for the average person.
It's a bit crazy.
In the 3 months to the end of March, Sydney saw the biggest gain, up nearly 6%, with a median dwelling price of almost $700,000. It's followed by Canberra, up more than 4% to $530,000. Perth was the worst performer, with values falling 2.7% in the quarter. Nationally, the rate of growth is starting to slow.
Compared to when the market peaked in April last year, we're seeing dwelling values rising at 11.5% year on year. We've seen that rate of growth moderate down to 7.4% now.
There is new supply coming onto the market which may ease house price growth. Approvals to build about 230,000 homes are expected this year, and that's a record.
The gap is closing, but we've got some way to go.
The Housing Industry Association's Harley Dale says stamp duty is a significant barrier to entry for some, labelling it the most inefficient tax in the entire economy.
If we could tackle that from a housing perspective, that would give a massive boost to affordability.
Property investor Margaret Lomas concedes Sydney may be unaffordable for many, but argues the potential for ownership is still there.
In comparison to 20 and 30 years ago, the cost of living of many of our basic staple items is comparatively less than it used to be. So young people, and anyone for that matter, have more disposable income these days to put toward a housing loan repayment.
Margaret, who built a portfolio of 40 properties in 17 years, says young Australians may need to take another look at their investment strategy.
A young person today can very easily get on the property ladder in an affordable property, still in a capital city, but maybe not in Sydney, and become a landlord first.
Buy where you can afford and rent where you want to live. And the HIA says buyers are still snapping up properties, with new home sales at a 5-year high. Let's take a look at the Australian share market now, which closed weaker as commodity prices fell. The big miners lost a fair bit of ground, while the banks were weaker across the board. Lend-Lease rose after a contract win in Singapore. Qantas and Telstra finished stronger. In Japan, the Nikkei declined on the first day of the Japanese financial year, and after a lacklustre Bank of Japan business survey, which also impacted sentiment. Wall Street stocks tumbled, snapping a 2-day winning streak, and just before Friday night's jobs update, the Australian dollar is a little stronger against the greenback and is mixed across the other major global currencies. And on the commodity markets, gold is up while oil is down. And tomorrow we'll tell you how to find your lost super. Trust me, there's a lot of money out there, and what you need to know before rolling your funds into one. Janice.